Hello, thanks for joining me again. Today I thought we'd look at shortening of the thrust, what it means, and how you can use it to your advantage in the market. Shortening of the thrust is a Wyckoff term, and Wyckoff normally looks at the market in terms of waves, and that is buying and selling waves. So you see the market as a buying wave and a selling wave, and a subsequent buying wave and a selling wave, and so on. Now, the equivalent in VSA is narrowing of the spread, and that's because VSA looks more at the market more in terms of individual bars. So instead of this being a wave, in a longer time frame, this would be a bar, and here would be the next bar, and the next bar. So these bars might be, say, weekly bars, and this is what price did in a daily time frame. Or these may be daily bars, and this may be an intraday time frame. But you can see the difference. Wyckoff's looking at the market in terms of waves, buying and selling waves, and VSA is looking at the market in terms of individual bars placed in context with the background. So just to be clear, you can see that if price traded over a period from here to here, it would have closed at the high, and this is the bar that represents it over that period, closing on its high. Then the next bar trades from here, it trades down a little bit, it's a short consolidation period, and then accelerates higher again. And this is the spread or range of the bar from here to here being represented in a single bar. Now the third bar is traded from here, consolidation, accelerates higher to here, and there's that bar. You can clearly see that each bar has a narrowing spread. The spread is from low to high, and the spread or the range of the bar narrows. Now, the same with the wave. The wave accelerates higher and consolidates. The second wave is a little bit shorter in length and then consolidates, and the third wave is a shorter again. This is shortening of the thrust. It's a Wyckoff term, which is just the same as the VSA term, narrowing of the spread, but generally the time frames are slightly different. Now we've removed those bars, and we'll just look at the individual buying and selling waves. If I mark the wave with some lines, you can clearly see the actual shortening of the thrust. You can see on this first wave here, price has made that much ground higher, and then on the second wave, it's made that much ground higher, and on the third wave, it's made that much ground higher. This is clearly shortening of the thrust. The thrust higher has reduced. Now, each time price makes substantial gains, it'll draw out some supply. The supply will generally come from profit taking from positions that were opened lower, from the side, from the left, people who have been locked into a position and are getting out at break even, or from above, which are short sellers coming in who think the market is going to turn and move lower. And these little selling periods, these consolidation, is absorbing the supply that comes in from a combination of those three sources. So you can see price accelerated higher and then consolidated and absorbed any sellers that were in the market, and demand overcame that supply and it accelerated higher again, and then went through a short period of absorption and then accelerated higher again. Each time the market has gotten, or the demand has gotten a little weaker, and or the supply has got a little stronger. Now, this doesn't mean the market has now become weak. and is going to break down in response. What it does mean, though, is that the market may now need a little extended time to continue. It may move sideways in a consolidation period for a while and regain its strength. It's effectively become a little weary from the initial thrust higher before it consolidates over a larger period and then accelerates higher again. It's like it regains its strength. It can, however, mean that it will break down, or at least have a larger degree pullback. You might find that the market upthrusts the previous high and then has a wave which closes lower. And then has a wave that closes lower than the previous low. This would be the first sign that price may be going to pull back more deeply or actually break down. And you might see a response a bit more like this. This would be a failure to recover back above the breakdown line, and price moves lower. Now in this case, what you've seen is price upthrust the previous high. Here was the previous high, and it's broken down below the previous low. This is a sign that it's going to at least correct to some degree. You've then had an upthrust of the breakdown line. This is the breakdown line, the line across the previous low. And then when price moves below the next pivot, you've had a confirmation of this weakness that came in. Now, so far we've looked at everything in buying waves or in an up wave, but exactly the same thing can take place, shortening of the thrust, as price moves lower. If I flip this vertically, you can see here exactly the same thing. Price had been moving sideways, selling wave comes in, and price breaks down from this sideways trading range. The buying wave is weak and short, and then the selling wave comes in, but it's a little bit shorter in length than the initial thrust lower. The next buying wave remains short and shallow, and then there is shortening of the thrust lower this time as price moves lower. You can see then that you've got a little spring formed. There was an upthrust before, now it's a spring, where price is traded just below the previous low, but it hasn't continued lower. There's been no downside follow through, and price then pushes back above the previous high, and you've got a spring of the breakout now. This is the breakout line. You've got a spring of the breakout line, and price moves higher. So price shortening of the thrust or narrowing of the spread can take place as price moves lower and or price moves higher. It's a term used for either. Now, just to show the same thing VSA style, if we put some bars on here and have a look, you can see the initial bar, we're trading this period here, closing on its low. The next bar is trading from here to here. And the next bar from here to here. You can clearly see that spreads are narrowing. In this case, the positive closed back above the high of this bar is a telltale sign that things may turn around. Now you can see spreads have narrowed from here to here, to here, to here, and then prices turned around, closed back above the high of the previous bar, and then you can see that price is now expanding higher. And if we flip that, just like we did before, you see the same thing as price trends higher and then corrects and starts to pull back. Now, to understand this a bit more deeply, we'll remove those bars and we'll flip it back again the way we were. Now, back in 1932, when Wyckoff was doing his education prior to actually beginning the course that we know of now, he was asked, how might you know when a trend may be about to change direction, whether that be an uptrend changing to move down or a downtrend changing to move up? And he said, when the buying waves begin to shorten in both length and duration is roughly equivalent to volume, and the selling waves begin to increase in length and duration, then the market may be poised to change direction or change trend. So you can see here the buying waves began to shorten, and then initially the selling wave was the same, but the buying wave shortened right here, and then the selling wave increased. All these selling waves were relatively short and shallow, and this selling wave was a telltale sign that something was up. Not only did it break below the low of the previous bar or pivot wave, the length and duration of the down wave increased, and the up wave, the subsequent up wave, was relatively short again, and the down wave, the next down wave, closed below the previous pivot. So there was the telltale sign here. This was the change in behaviour of the market, and there was a telltale sign that price, now it may have been a shakeout at the time, but when you saw the fail to recover back above the breakout line and then the subsequent downturn, this is when you had confirmation of this weakness, and this is when you would be able to open a short position and be quite confident that you were in the right direction. And that sort of reminds me, there's a famous quote that describes this action. I'll read it to you. The market is a tug of war. Successful tape reading requires the ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. There are critical points which occur in each swing, just as in the life of a business or of an individual. At these junctures, it seems as though a feather's weight on either side would determine the immediate trend. Anyone who can spot these points has everything to win and little to lose. And right here, the market was very finely balanced. It just took a feather's weight on one side or the other to change the trend. And here it was here. A little bit more weight came in on the selling side. It broke the price down below the previous low, and then price subsequently couldn't recover the lost ground. The buyers were now weak, demand had become weak, and then price continued lower. This is the change of direction, It just took a feather's weight to change the immediate trend. Now, we've been looking at pretty much textbook perfect examples now. We might move and cross and have a look at some real world examples where things aren't always quite as clear. Now, this is a chart of the stock PLS, Pilbara Minerals, and we'll draw some waves on it, see if we can work out what was happening. So price moves out of this sideways action. You can see that the thrust out remained fairly consistent there. Had two waves up, but this third wave really didn't make very much ground, and this was shortening of the thrust here. Now, effectively, price has broken out from 40 cents. It's doubled. It's now 80 cents. So there's no surprise that some selling pressure came in. Selling pressure was relatively light here. You can see down here the volume wasn't anything to be concerned about. And then price accelerated away. But now price has effectively doubled, and the thrust shortened, and some more supplies come in. So it's no surprise to see price having to spend a little bit more time consolidating. This is what happens in the real world. You can see that price never broke below the previous low here, and then when the next pivot comes in, I usually use that one in preference to the previous one. I always keep this one in mind. That's not going to go away, but I would generally look at the next pivot that happens. So price didn't move below that pivot, and then price accelerates out again of that little consolidation period. Now, this bar looks ominous. That's someone selling for sure, or some group or whoever, and in response, price has to go through a consolidation. And you can see the up wave here was, and this was this down wave, this selling wave was probably the biggest selling wave since price broke out. So this poorly closing bar on the high volume had probably encouraged some others to sell as well, sell into the demand that's sitting there. And this wave here doesn't get anywhere near the previous high, or even if you come down here and say that the wave finished on the close of this poorly closing bar, you've got a upthrust effectively. But if you notice, price hasn't really moved below the previous pivot, and instead price recovers, and then, as often happens, especially in speculative stocks, price accelerates higher and goes past the previous high. Now, once again, you've got a poorly closing bar, which is a bit of a concern, and the initial pullback is actually quite shallow and brief, but this buying wave here is a concern too. You can see that it didn't go above the previous high whatsoever. It was a fairly long duration, so quite a big high volume, and it's failed to make the previous high. And then the subsequent selling wave that comes in response is the biggest selling wave we've had so far, and it also closes below the previous pivot. Here's your feather's weight. It's come in, and this is your warning that a change in behaviour may be taking place. Now, you can see the next wave can't even challenge this breakdown line, and price moves lower again. So effectively, you've got a weakness here, a longer duration up wave or a buying wave, which hasn't made any further ground higher, an increased duration down wave or a high volume down wave or selling wave that's broken below the previous pivot. You see all the previous pivots held, it didn't hold here. And then a failure to regain price back above the breakdown line. This would have been on low volume. The demand has now reduced and supply is increasing, and price then moves sideways for a period. And if you had shorted here or shorted here, price eventually went back to the 35 to 40 level. Now we've got a chart of crude light futures on a weekly basis. Now, I was previously calling this market weak for some time, as you'll see, but it takes a long time in the real world for things to actually take place. Let's put some waves on it and you'll be able to see how things pan out. We'll do a combination of the waves and of the bars here. So you can see prices pushed out. We could mark that as a little wave there and a little wave there, but a single down bar probably isn't a wave. Now, so far, you can see prices accelerated out of a sideways range, and the thrust has shortened a little so far, but not too bad. But you can see here, something serious happened here. I can't even remember what it was at the time, but it's a single down bar on very high volume. So something was up for sure. And so in response, the market has to then go through a little consolidation period to make sure that the market isn't going to break down. And you can see we marked the low of that bar. It was never threatened again. The next two down waves were both higher, prices recovered, and it accelerates higher again. Now, just look at this bar here. It corresponds with this volume, and all was fine here. Price was accelerating away, and then this bar. This is a weekly chart, so this is a week's trading, very narrow spread, still above average volume here, and then the next bar down and closes below the low of that bar. This is a little change in behaviour. It's only on a short time frame, but at this point I was quite concerned, and we had an increased selling wave in response, the biggest and longest selling wave since we broke out. So as usual, we'd mark the low, see what happens. Price then recovers and moves up again. Now, look at this bar here. I think it corresponds to that volume there. It's still high volume, it's above average, but the next bar was down, and the following bar was down, and the following bar was down. And this bar here, if you look, it's up on no demand, and you've got weakness, this little thin bar here, this bar here, which we called as potential selling, weakness in the background. And now you've got no demand, and then you have another big selling wave coming in response. And you'll notice here that price made very little ground above the previous high. So we've almost got an upthrust of that previous high there. We've got weakness in the background, now no demand. Now this wave comes in, a buying wave, and check out this bar here now, closing poorly. Next bar closes below its low, and we've had the buying wave really only upthrust the previous high, failed to close above it. Now here's the previous pivot, and price moves lower quickly. Now you could have potentially drawn a trend line here below this pivot and this pivot, and got yourself in a bit earlier. If you were trading it, you would have needed to be a little concerned here at these two double pivot lines. There may have been some support here. As it turned out, price just sliced through it with no regard to anyone who was looking at supporting the market here whatsoever. And price pretty much just broke down. The subsequent buying wave was weak and shallow, and then price accelerated slower again. You can note there's a bit of shortening of the thrust there, no doubt. Look at the length of this wave, then the length of this wave. Then price recovers a little, comes out, little consolidation above this high. Now, if we extend this line here right across, we see that price then came up to the breakdown line. This is the breakdown line here, and was unable. It tried to recover. It wasn't able to recover back above the breakdown line, and that would be common. Very rarely, after price breaks down like this, is it able to recover back above the breakdown line. There'd be a lot of supply that may have been stuck in here. Anyone who wanted to get out, here was your best chance. Price then fails to recover a second time here. This bar here was no chance, and we mark that pivot, and then price accelerates lower. Now, last week you see here, there was definitely some sort of attempt to support the market, and we'll see what comes from there. You may find that this breakdown line here gets tested and price does something like this. I will see. You never know with the market, can move anywhere. Now you can see that the last two examples showed how in the real world things aren't quite as clear as those earlier textbook examples I showed. We'll have a look at one more. And now we've got a chart of the XJO, the parent index of the local market. It had been trading sideways for quite a period here, and you can see price broke down here. The subsequent buying wave was long and drawn out, but it was never able to recover the breakdown line. And you can see in the real world, price doesn't always behave exactly as expected or textbook style. It dipped lower, but then recovered. But the recovery, the buying wave, was very weak and short, and then price broke down properly. And now you've got price breaking down, an attempted recovery here, and price then confirmed the breakdown, headed lower. Now, the subsequent buying wave was again weak and shallow, and you've had the thrust has shortened here. You can see how much ground price made on this wave lower, and then how much it's made on this wave lower. There's no doubt that the thrust has shortened, and we mark the low as normal. You can see here the buying wave has increased substantially. So there was some support come in here, and this may be a change of behaviour, but you just have to wait and see what develops. You can see the next selling wave was almost equal in length, but it made no further ground lower, and you can see it almost, well, it did. It created a little spring of the previous low, but then the buying wave was fairly weak. Now, there's no doubt some support came in here, and some of it may have been dumped. You can see these two bars here probably show that some of this was sold, but price didn't go below the previous low, so you would have to say something's up, but you wouldn't know exactly what was going to happen yet. And then the market goes through this period where it's also unsure. I would imagine because our market, or all markets to some degree, especially when there's weakness overseas, have to do what happens overseas, because they're not going to be able to stand up to a full-blown weakness in the US markets in particular. So it always respects those markets. So you can see here there's probably the markets were unsure exactly what was going to happen. So they go through this period where the uncertainty continues. No one knows whether we're going back up again in response to like the buying wave we saw, or whether price is going to break down again. You can see here there's a final thrust lower, more like a shakeout than an actual, it's too much to be a spring, too deep to be a spring, but price dips lower and then accelerates back out, tests and moves higher. Now, it's worth noting this really high volume here, it was expiry, or expiry is included in it, but it's still very high. You can see there would have been expiry in some of these, or probably here, possibly here as well. This is very high volume here, and it corresponds with this bar and this bar. Now, if it was all selling, you couldn't possibly say that this bar would then turn back up in response. There must have been some buying within here, especially as this bar has closed well off its lows on the very high volume here. Now, granted, there was some expiry in that, but once price moved above this high here, this is where the weakness from the initial weakness on high volume came in on this bar. Once price moved back above it, especially after it comes back down, tests it, and then moves higher again, as soon as that happened, maybe on this bar here, the low volume pullback, you had to be convinced when this bar then accelerated higher, moved above this bar's high, the prices were going to accelerate higher again, and which they've done. They've pretty much continued higher since. So reading the bars and the waves in combination is how you can read the market and have some idea on what might be going on. Okay, hopefully I've explained that well enough for you to understand and you enjoyed it. Let me know either way. That's me done. See ya.